Okay, folks, welcome to another Thursday Night Stock Charts Live. Thanks for spending a little bit of time with me. What we're going to talk about tonight are, of course, the weekly charts on a Thursday evening. Yes, one trading day left to go. It can make a big difference. So this is our cursory view of how we're poised to close out the week. One trading day left to go. On Saturdays with members, what I'll do is I'll do a repeat of tonight's video. However, no trading days left to go. We're going to do a armchair quarterback of how the markets closed out the week. Do we want to add to longs, add to shorts, neutral? That's when we make our determination. We'll put together our watch list and we will discuss our game plan for the new trading week. We're going to talk about economic data as well. And we're going to take stock chart requests. Really, really simple stuff tonight, as usual, because I'm a simple person, no genius here. And before we get to it, folks, I want to talk to you about our sponsor, which is TrendSpider. Automate your grunt work, folks. There are a lot of opportunities out there. I'm actually thinking about today, I've voiced it to members about changing up our strategy a little bit from being short bias to, you know what, maybe taking some of that risk off the table. What helps me to be able to make that decision? Making informed decisions by using automated technical analysis. Are we closing above weekly support levels at current resistance levels? If we do so, then we're validating our gut feeling right now that we may have a strong closing price action on the week. So improve your accuracy, reduce costly analytical mistakes, and time your trades with precision by using their trade alerts, find winning chart setups with their scanners. 35% discount code below. Take a tour. There's your demo and your 7-day free trial offer. I believe in the product so much. I know the management for years. When they first started out, I met them. I believe in the product. I bought into it. And I give it away included with our silver and gold level memberships. I have a 14-day free trial offer to the contrarian trader. Link below. Okay, let's get to it. Let's begin with the economic data that was released this week. Not a huge amount of data, and the data that was released was meh. It wasn't good. I think that this is still an economy that is in somewhat of a meltdown mode, and how I'll support that is by pointing towards the jobs data. And you may be saying, you know what, Bob? Hey, listen, man, you're way off, dude. The jobs data dropped yet again on the week. Well, we're still over 200,000 jobs per week in terms of job losses, higher than where we were pre-pandemic. And remember that this is a weekly number. And the jobless data that we got, what was it, last week, was just absolutely abysmal. So net, this economy is losing jobs, not increasing jobs, losing jobs. So we're still in a bit of a meltdown mode. We had the Fomc Minutes that were released yesterday. And initially I was perplexed because I didn't do a deep dive onto the statement. I did it last night. And then I realized, okay, here's what I'm getting wrong. Because I was confused. Tech stocks rallied along with the 10-year yield. That usually doesn't happen. Not when yields get up this high. So in reality, in reviewing the Fomc Minutes, I realized the statement that the bond market ran with was ridiculous. The statement was basically they're going to think about talking about a plan that they'll put forward some point in time in the near future of rolling off debt off their balance sheet. It could be 2 years, 3 years, 4 years from now. And let's face it, one thing is like an 800-pound gorilla in the room. And it's not the debt. That's only getting bigger. That's like a $10 trillion gorilla in the room. We have the midterm elections. The Democrats have a very, very slim majority in the House and the Senate. At current, their disapproval rating is skyrocketing. And not that the Republicans are any better. You do have a few that are out there, Jim Jordan, Marjorie Taylor Greene, who I like, because they have cojones. But most of the Republican Party, I wouldn't give you a wooden nickel for. So they're probably still going to take it, though. They're probably going to take both the House and the Senate. The Democrats will do anything to make that not happen. They'll actually let you take your masks off. So this is what's coming down the pike. Will there be a Fed increase before November 2022? No way. Ain't going to happen. And by their own admission, it's not going to happen until 2023. So tomorrow we have the Marquette PMI number, Purchasing Managers Index number, important number. We had building permits that came out on Tuesday. They missed slightly. Housing starts, a big miss there. Is that due to lumber prices, copper prices? Quite probably. And rising interest rates, people aren't qualifying as much as they once were. But still very, very low historical mortgage rates at this point in time. So I don't think that's the major problem here. I think it's the cost of building that's causing the slowdown in housing. Now, building permits, just because they issue these permits, they don't need to break ground. So it's a forward-looking indicator until it's not. So right now, building permits, which I would normally cite if we had strong housing starts as being a forward-looking indicator, now suspect. Because we just may be seeing the beginning of a slowdown in home building. Let's get to the weekly charts. Now first, let me say hello to everybody. Take a quick scroll through here. Okay, I'll do this. I'll buy into it. Get Blowed 407. Hello to you, sir. Franklin, hello. Matt Carter. Hi, Bob. Your voice sounds synthesized, buddy. Very futuristic. Always bullish, Bob. Very good. At least my audio's on tonight. Westlaw. Hey, brother. Ride traded with huge volume, and it looks like short covering because their earnings expected on Monday. Do you think it is bottomed out? We'll take a look. All right. Larry, happy birthday to Cher Bono, 75 today. Happy birthday, Cher. Paul M., good evening to you. The mic is a little off. Is it that bad? Let me check something out. That's the right mic. That's the right mic. Bear with me. Bear with me. Desktop audio. Does that sound better? I don't think it's supposed to. This is for speakers, but we'll give it a shot. Let me know if that sounds better. You never know with this thing. Okay. It's okay now? All right, good. Good. All right. All right. Paul said hello to. All right. McCarter. Hey, Bob and Chad. How much Bitcoin did you buy this week? Any? I didn't buy any Bitcoin. I bought coin. And we added more yesterday morning, just off the lows. We're doing well with that. So Kathy Wood likes to pay up. I like bargains. Jody, what to do if you bought Coinbase at 330? Well, So, yeah, that's a good question. All right. What I would do, some people say don't average down, okay? I believe in that if you're buying on emotion, if you're looking to make the net asset value, your break-even point lower just for the sake of feeling good. That's wrong. That's stinking thinking. But if you're taking a look at the chart and you're saying, and you're looking at the fundamentals and you're saying, you know what, the growth rate here and the price is reasonable and it appears as though the price is beginning to rebound, then you're using logic. And as long as you're not leveraging yourself up too much, because it's a very volatile stock, add more. I added more yesterday on weakness because you knew it was a shakeout. The stock has already gotten hammered. I think the high was what, 449 after the day of the IPO, the week of the IPO. So you didn't get into the high, you didn't get into the low. You have an opportunity now because I had a very good day today, very good rebound today, and we'll go over it as a matter of fact, since you brought it up, to purchase more. Now, the other thing you could do, assuming that you have at least 100 shares and an options account, you could sell out of the money covered calls. I had sold the 307.50 strikes expiring, is it July the 2nd? I believe it's July the 2nd. If it's not that, it's June the 25th. I could sell more covered calls today if I wanted to. I'd rather wait for a stronger rally to sell into that rally. So that's an option. I'm sure you don't want to sell at the 307.50 strike. Sell at the 330 strike. So that's just an option for you, or a couple of options for you. Average down and or sell a covered call, generate some cash flow while you're waiting to get back to break even. That's what I would do. Learn from your mistakes. What are you going to do? Don't beat yourself up. This is a business. Everybody makes mistakes. I made a mistake. I bought more Cal-Maine foods, and I got schooled for it because I broke two rules. I didn't wait for the breakout above 38, and here I am every night saying we'll buy more on a breakout above 38. I had hoped. I used hope as a logic, which is never, ever a sound logic. Assuming that we would rally on the day. It faded. And I bought before 3 p.m. That's rule number 2 I broke. So 2 rules. You know what? We're going to make them. We'll get our money back. Don't worry about it. Don't panic. It's all good. Okay. Chinner. Hey, Chinner. You got some Ethereum yesterday, 2100. Good for you. Nice price. 480 shenanigans. Sold Bitcoin 55,000. Bought 32K. Thumbs up, brother. Good for you. Wham bam. Wham bam. Hey, Bob, can you take a look at BIGC? Okay. They IPO'd in August. They have reported 3 straight quarters of 40% year-over-year growth. Earnings or sales? I'm going to assume earnings. The stock dropped with other SAS companies. I think it's a buy. We'll take a look at it. Jody, Virginia. Okay, hello, true. Thank you. You're welcome. Okay, let's do it. Weekly charts. This is our preview of what the closing price action on the week is looking like. Now, I went into the week expecting a breakdown. Didn't get it. We're going to skip the yield curve tonight. Let's go to bonds. Bonds are very interesting. We're going to kick things off with... Thanks, Ricardo. Yes, it was a very good question. Thank you for being open and sharing your experience with your trade, Jody. Okay, so the TLT. There's all going to be weekly charts. I may take a look at a daily chart, but the weekly charts are looking pretty good for the bond market. Why is this significant? It's significant because technology has come under pressure of late, a lot of pressure. Why? It's because bond yields have gone up and bond prices have gone down. This week, just the opposite has occurred. Bond prices have gone up with yields. Just want to make sure this is updated. Are what, flat? Yeah, they're flat. They didn't go down. They're flat. They're well off the highs of the week, but not negative. That's enough for buyers to go coming back in and buying up tech. Think about what's going to happen if you see a pullback on yields and we remain in this trading range for a while. You could quite possibly see new all-time highs in the triple Qs. But we don't know yet. One trading day left to go, right? And the other thing is this. Back to the weekly chart, TLT. We have not recaptured support. We're at resistance. So, do we have a green light vis-a-vis the bond market to go in and to start buying tech stocks? No, we do not. We have not broken out yet. We're flat on the week in yields. We can go in either direction tomorrow. And frankly, when last night, I mentioned this earlier, I thought for sure we were popping up higher today on the 10-year. I understand why this price action occurred now. The bond market was completely off the wall. But no follow through. We need to see a breakdown. We do have the 20-period moving average, which is rising and threatening to cross above the 50-period moving average. That's bullish. Stochastics, rising, still bullish. RSI, lower highs and lower lows, not so bullish. So that's the bond market. Now, in terms of tips, Treasury inflation protected securities, why is this important? It's a barometer for the fear of inflation in the market. People are selling tips 2 weeks in a row. This on the heels of some real serious inflation numbers. So what do I read into this? I think that the CRB index, which is a composite of 18, 19 commodities, many of those commodities, including crude oil, we'll go over that in a moment, have corrected these past couple of weeks. Immediately after that CPI number, the Consumer Price Index number, along with Bitcoin, which trades along with the CPI. So a bit of a divergence there. So you may be seeing the tips pull in due to the fact that A, yields aren't moving up higher, B, commodity prices have come off a little bit, not including gold, not really including silver, and that money may be rotating out of bonds, or at least tips, into technology stocks. Just a thought. Hypothesis only. So the tips, week on the week, pardon the pun, the US dollar. The breakdown continues, folks. We're firmly down below 90 now. And this is what's going to stoke inflation to ever greater levels. Daily chart. We were up yesterday. Today, not quite a bearish engulfing, but close enough for government work. I think the dollar is going to break. The volatility index, weekly chart, we're up on the week. We were considerably higher, but was up just shy of 10%. RSI hooking up. Stokes hooking up. So I think we're in a consolidation range. We're back above that 20 mark, and that should make everybody really think about your position sizing and your willingness to leverage up. Because if we do break out on the VIX, it means that the S&P 500 is going to tank. Margin debt is at all-time highs. And your stock may not even go down on a day that the market tanks. But your broker, all they need to do is say your margin requirement just got jacked up. If you're maxed out on margin, you got a margin call. So think about, with VIX above 20, think about smaller positions and not being as levered up on your positions. And that way, you have enough buying power if and when this market does correct, that you're able to maneuver. You're able to take advantage. Just like yesterday. Bitcoin crash, coin crash. What did we do? We bought. Because we weren't levered up. I always try to keep X amount in capital. My net lick. If you have your net lick, my net liquidity is always at a certain max. I try not to go over it. That way, I have a lot of maneuverability if the market goes in the wrong direction. And I need to either A, manage my positions, or B, take advantage of opportunities, or both. The Dow Transports. Now, this is a serious chart. The Dow Transports are what I like to call our canary in the coal mine for the stock market, because usually as goes the transports, so goes the rest of the market, in particular, the Dow Jones Industrial Average, the Dow theory. Look it up on Investopedia. The Dow theory. They should trade in tandem. If they don't, if they diverge, that's a problem. The transports are down over 2 3/4 on the week. Hey, John. Morning to you. Yen. That's the leveraged ETF putting you long of China, right? Because Yang is the bear ETF. Okay. Resistance. We'll take a look at that for you. 480, we're going to go over AGQ when we go over silver in a few minutes. So I will get to you, no doubt about it, pal. All right. So Dow Transports, weekly chart, not looking good. Very, very bad, in fact. Daily chart, not looking wonderful here. Volume, the only thing I could say positively here is volume has been below average, and volume did drop off today versus yesterday. But these Stokes, these Stokes are brutally ugly. So I would avoid the transports for a little while. And just keep this in the back of your mind. If you're thinking about buying stocks, in particular your industrial stocks, remember the Dow Transports, and it all goes back to, okay, position sizing. Maybe I'll be a little bit more conservative right now, given the fact that the transports are underperforming. Keep in mind, here's the Dow Jones. We'll go back to the transports. Dow Transports are down 2.8%. Granted, they're coming off of a very, very overbought level. RSI was above 85 2 weeks ago. So we're down 2.8% this week, but the Dow Jones is only down 0.87% on the week. So the Dow Transport's considerably underperforming the Dow Jones Industrial Average. Down volume on the Dow this week is relatively light. One trading day left to go. Daily chart. We've held the support level. We've been in a trading range for a while. Stokes a week. We need to see this Stoke hook up, just as it did back here. We saw a bit of a fade on the day. If this continues to consolidate to the right, we're forming a potential head and shoulders setup. Left shoulder, head, right shoulder on price. So beware of the industrial names. The S&P 500 weekly chart, down just over a third of a percentage point. The Dow Jones lagging the S&P 500. Daily chart. That's not a daily chart, Bob. All right, so on a daily time frame, what we're able to do is we're able to recapture support today. We had broken down yesterday with a gap down. Today we recaptured it. The problem is that volume was okay, but it was below average. I'm not loving these stocks at all. I don't like the momentum here. RSI is looking good. The small caps, of which we are short, continue to weaken up. This is not my annotated chart. Let's go to my annotated chart. Okay, so we had broken out on the small caps the week of April the 26th. And we've been retesting the breakout point ever since. Now, I'm all for retests of breakout points once, twice. We're on our third retest. It's getting a little bit long in the tooth. So I'm gonna hold on to our short position here. If we fade tomorrow, that means we'll close down below this at current support level in blue. If we close down below that mark, the small caps are in trouble. Daily chart. Now, what's the probability of us closing down below that mark? I don't think it's that high. I think we're going up higher. Why? RSI broke out here on the 14th, pulled back, retested, followed through to the upside today. Stokes, the jury's out on. I'm not quite sure about. Price action. Bullish key reversal bar. We recaptured support today. Volume light. So the small caps, I think they're going to move up higher, but they're suspect because of volume. I don't like the volume. I don't like this momentum on your stochastics. It's a bit sloppy. It's not what you want to see. It's not ideal. The trip cues. Now, here's a good-looking chart. Assuming that we close where we're at current or higher on the week, because of all the indexes, the trip cues, they're up on the week 0.75 of a percentage point. Now, we have one trading day left to go. We should close strong, but you never know. We still have a bearish divergence on RSI that has not been resolved. Volume on the week should come about on par with the moving average, which is pretty good. So the cues are becoming more attractive. And they managed to close above not one resistance levels today, but two. The question is, can it hold it? Jury's out. So we'll see. Now, Stokes are rising, good. RSI is rising, good. Volume, a little bit light. Yesterday was very good. So the Qs, looking pretty good. The banks, not so good. If yields drop, it's not good for the banks. Even if the market goes up higher, the banks will probably lag. Why? Net interest margins. They increase when interest rates rise. And plus, these banks are having problems parking all the cash that the Federal Reserve is printing on their balance sheet. So the banks have their own set of unique problems right now. So I'm not a lover of the bank's daily chart. Sorry, folks. Daily chart, doji star formation, not liking this. Lower highs, lower lows on Stokes. RSI not looking wonderful. Volume was good today. But when I see volume like this, I want to know what the price did on a percentage basis to get a feel for, do we have strong accumulation or do we have churning? Let's answer the question. This is churning. A lot of volume. For every buyer, there was a seller. And net on the day, we only closed up 0.05% on the day. This is a tug of war between bulls and bears. Not my place to want to enter. So the jury's out here, not loving the banks, not with yields coming under pressure. Technology, very similar to the Qs, looking pretty much the same exact chart. Bullish key reversal bar this week. Volume is going to be probably a little bit light, maybe on par with the moving average. Let's take a break here. McCarter, Goldman Sachs sold Wells Fargo and bought Morgan Stanley. McCarter, Michael Burry bought Wells Fargo. He bought Wells Fargo? I was looking, I read through his 10F. Also, Bob, sorry to jump around. I read on Zero Hedge that Berkshire and Goldman say the real estate bubble is worse than 2008. Housing prices in certain areas have increased versus 2008. Yes. But you got to keep in mind that 2008 was quite some time ago, and we need to factor in inflation over that period of time. So in certain areas, sure. Do you have pockets of bubbles? I would agree with that. I don't think you have them in New York. Certain states, blue states, I don't think you have them. Red states, Texas, certain areas of Texas, sure. Certain areas of Florida, no doubt. Miami, St. Petersburg, Tampa, those areas, they're in fuego. And the other thing that could tamp down housing prices is now that you have the vaccine out, remember the two things that caused this bubble, actually three things. Cheap money, one. Two, people fleeing the cities because of these moronic mayors in the blue states and governors. Three, you have COVID, right? People don't want people walking through their houses, so they didn't put their houses up for sale. Now that you have the vaccine out, you're going to see more inventory hit the market. You may just see home prices level off a little bit organically, especially if you see yields get jacked up. I'm not too worried about housing. I think what they're doing is they're taking a chart of 2006 when you peaked out, and they're comparing it to present day. It's not a fair comparison. It's just simply not fair. You had inflation. The cost of a buck back then, a buck was worth a lot more back then than it is now. So that's my take. Semiconductors, bullish, very bullish week this week, folks. Bullish reversal bar, up over 2.5% on the week. If you hear my dogs barking up there, I'm sorry. Daily chart. Big gap up today. Let's update this chart. We have a breakout. Nice little W formation going on here. Stokes rising, good stuff. RSI rising, good stuff. Semis looking good. LABU, weekly chart. This is the biotech ETF. Oh, the bond bubble is no doubt real. Yeah, no doubt. No doubt real. I agree with you there, no doubt. This is what you call a spinning top week. Franklin, I know Franklin's on. I know you sent me a message on on the Slack forum about LABU. I have been watching it, and yeah, it's setting up nicely for a strangle trade, which is an options trade. Stokes are very oversold. I'm liking this chart. We finally stopped going down. Volume on the week, outstanding. Let's go to a daily chart. Daily chart, we're up 6% on the day. Remember, this is a leveraged ETF. 6% on the day, looking good. Let's just say we close at resistance. I think that we are in a triangle formation here, and we're at the cusp of a move up higher on LABU. Nice little cup with handle formation on your RSI. LABU is definitely on our watch list as a trade. Consumer discretionaries down over 0.75% on the point on the week. I don't like this chart. Lower highs on your Stoke RSI. Volume already is above average on a Thursday night. Daily chart. It gapped up higher today. I'm not buying this gap. I would avoid consumer discretionaries. I'm just not feeling it. Energy, very concerning. Oil is down, folks, and it has been down ever since that CPI report. It was a sell the news event. Energy is down so far this week over 2.5%. We're at current down below support at 52 on the XLE. Volume is going to roll in above average on the week. So we're going to have a distribution week here. Daily chart. Lower highs Stokes, lower highs RSI, and we have a confirmation breakdown. They may pop it tomorrow. I don't think it's going to hold. I think they're going to fade it, especially if oil is down. Speaking of oil, we are down nearly 5% on the week on the barrel of oil. This is the USO. Volume is going to roll in above average to the downside. Distribution week. So we booked our profits last week on ExxonMobil. Glad we did. We're out. We're still going to watch it. It's a best of breed stock. Boyle. This is a leveraged ETF putting you long of natural gas. Now, we bought this last Friday. We sold it on Monday, 10% profit. The reason why I liked Boyle was because we had broken out above resistance. We consolidated. And then last week, we had an outside reversal bar. Now we've pulled back. And what we did here was rather than buy this pullback, I traded it a little bit more conservative. What I did was, the daily chart, I sold a put. When I sell the put, it's not a bear play, it's a bull play. So I sold the 25 strike for $1.90 credit. So if these shares are put to me, I believe they expire the 2nd of July. If they're put to me by basis cost, it's $23.10. So I don't think they're going to be put to me. You never know. But I think we've probably bottomed out here. We've retraced all the way back down to the breakout point. I think that we're going to continue up higher. The only fly in the ointment, I don't like these Stokes. We're losing momentum. Volume was light today, which is good. So it was good that we didn't buy back in on the common shares just yet. We sold puts, different strategy. We're still long, but we have lowered our basis cost to $23.10 if assigned to us. Emerging markets, very, very good week. Very, very good week. I don't like these Stokes because when you have Stokes trading down below 50 and declining, rallies tend to fade. So these need to get resolved. These need to hook up. We're not there yet. So I'm still suspect of this weekly breakout. Still only Thursday, one trading day left to go. A lot can happen. Daily chart. We've rallied up and into the declining 50-period moving average. Volume today was abysmal. This was a short squeeze. So now I'm really suspect of the EDC. We'll watch it on Saturday, see how it closes out the week. Brazil, we're watching weekly chart. Up on the week, no new weekly high. Stokes look really, really good. Let me take a look at EDC for a second. Back to the weekly chart. You know, the Stokes look very similar on both EDC and Brazil. If you were to take out these past couple of weeks. Interesting. So watch for a spike up higher on these Stokes next week. Very similar to what happened here. Because I'm wanting to get long of emerging markets. Now that the dollar is finally breaking and melting away, we really got to start focusing in on emerging markets. Vietnam, monster. This is going to rip. EPI, India. Looks like that scare with COVID. They went through hell over there. They're finally breaking out. These are our two favorite areas. I'm going to shoot my dog in about 2 seconds. Gold, weekly chart. We are long of the gold miners, not gold. Up over 2.33% on the week. Stokes rising, RSI rising. Volume is going to roll in above average. Third consecutive week of rising volume. Daily chart. Nice reversal day today. Volume just shy of average. Looks good. Bullish on Cyberbob. Hey, Ramon, nah, that's my. If I shot, that's my little mini Aussie, Mina. She never stops. It's a beautiful, beautiful dog, but my wife would kill me. Believe me, she would take that gun and turn it on me first. Gdxj weekly chart up over 5%, up over 5.5%. Volume light this week. Daily chart. I think we're going to break out on Gdxj. I'm not loving the volume. My father-in-law's in the hospital. My wife is away and freaking out. All right, I have a little bit of emergency going on here. All right, silver miners, weekly chart. We have a new weekly high. Perfect chart. Love it. They're going up higher. We're long of the gold, silver miners. Volume very heavy. AGQ. Silver. No breakout this week. We are up higher on the week by nearly 2.75%. Volume is very good. Daily chart. Doji star formation today. Sign of indecision. Light volume. I think this gets resolved to the upside. Bullish on silver. I think it goes higher. Uranium weekly chart inside week. The trend is still up. Let's go to some chart requests. Okay, let's do this. I'm going to keep it limited tonight, folks. I got to log off exactly at 7 because I have an emergency. UONE, this is Urban One Inc. We have a monthly breakout here. Loving the setup. Great breakout. Weekly chart. Beautiful move up higher. A little bit extended. We're up 81% on the week. That's insanity. Looks like retail. I think this is a retailer. Is breaking out. Beautiful, beautiful breakout here. You can't chase it. We're trading above the third standard deviation Bollinger Band. Daily chart. This is nuts. It's literally off the charts. You got to wait for this to pull back in. The number I'd be watching for on Urban One, right down here, $7.29 per share. We'll keep a little bit of sensitivity. I would not chase this stock, folks. Allow for the pullback. It's coming. Sure as God made green little apples, it's coming. Let it come to you. BRPA, Big Rock Partners. I'm not familiar with this. Let's go to the monthly chart first. Huge breakout, massive multi-month consolidation. Looks good. We're on the verge of a major breakout here on Big Rock. Weekly chart. We do have a breakout here on Big Rock. Great volume. Daily chart. All right, so I'm going to take the automated trend lines off. I'm going to show you the value of them. Because this is not what I would have done. But I'm going to do it now. I want to set my alert at this support level. And we're good to go. We have resistance above. You can see we hit that resistance level, overshot it. Sellers moved in. They sold that rep. Wait for it to come to you. LAZR? Lazard. Oh, no, Luminar. Nice consolidation. Very, very nice. Bullish reversal bar on the month so far. Only a few trading days left to go. Weekly chart. We broke out here, April the 26th, the week of. Pullback retest 1, 2, continuation breakout this week. Looking good. Very nice day today, daily chart. Note the Bollinger Bands, how tight they are, setting up for a Bollinger Band squeeze to the upside. Very nice chart. Bullish. I think it goes up higher. Ride. Oh, Lordstown Motors. Didn't they have a whole bunch of troubles recently? Headline stuff. Let's get rid of this. We're still in a downtrend here. On a monthly chart. Weekly chart flirting with a breakout. First, we need to see. Here's what I want to do. I just figured it out. We need to see a breakout above this resistance level. If it fails, we avoid. If it moves up higher and closes above resistance, we can open up a small position. That's the game plan here. Let's go to a daily chart, see if there's anything else that could sway me. Nice move up higher. On volume. Sequentially rising. We pulled back today. No big deal. So the chart is definitely improving, no doubt about it, on a weekly time frame, daily time frame, monthly time frame, not yet, but you have to have the first two to get the third. So ride looking pretty good. But no great rush to get involved here. Westlaw, that is what I'm thinking about. Thanks, Bob. You're welcome, pal. Anthony. PLT. I'm going to cut it off there. Makar, I'm going to take your Tesla, and I'm going to take silver. I already went over earlier, so if you want to scroll back, I went over the silver miners and silver. AGQ is our proxy for silver. All right. Coin. All right, not a lot of data here. We're going to use, I'll try a daily chart. Now, Jody said that she's into this at 3:30. Let us, where's 3:30? Right about here. Right about there. All right, so we're leaning against this. It's only a 2 standard deviation Bollinger Band, not a big deal. But we had a day today that was good. Let's go through the intraday chart. This daily chart, just not enough data here. 4-hour chart. Now, I'm thinking about Jody in mind here. Now, we broke out of a 4-hour declining wedge or descending wedge formation. I think we're heading up higher. Might we pull back and do a retest? Maybe. It's very volatile. But I think that ultimately we're going to head up higher here. So just show a little bit of patience. Think about selling. If you're able to add more, add more. But think about selling a deep out of the money covered call. And at least that'll help you finance. If you're on margin, that'll pay your margin debt. So your margin interest, I should say. So think about that. But Coinbase, I think it's going to go up higher. And the reason why I bought this, I've owned Bitcoin. I did well with it. I sold it way too early, obviously. I hear that story all the time. But I don't know what the winner is going to be. Bitcoin is losing more and more market share every single day. So who's going to be the ultimate winner? I don't know. I don't even understand Bitcoin. What I do understand is who benefits from all of these cryptocurrencies? Coinbase. So that's why I like it. I can understand their business. I don't have to worry about cryptocurrencies, who's going to be the winner in the long term. It doesn't matter to me. All right. Yen. Oh, I'm sorry. BIGC first. Big Commerce. We've looked at this one before. Pretty sure we have. Weekly chart. Good week. All right. So what we're doing here is we're finding a bottom. Rule number one for buying a stock that's beaten up, first thing it's got to do is stop going down. So while, yes, we're down on the month, we are holding critical support at 51.28 per share. That is not insignificant. To me, I think this is a buy right now with a stop loss right below the month's lows. Weekly chart. Good week. We're up 11.5%. There's that resistance level at 51.28. You want to close above that mark by the end of business tomorrow. Daily chart, same deal here. I think this could be bought. You just want to buy it above 51.28. We closed at 51.31. So it's looking good. I would buy small, add on strength. No great rush here. Yen for John Spencer. This is a China Bull ETF. So before we go into this chart, I'll bring you back to the EDC, the Emerging Markets Leverage ETF we went over a while ago. All right, so far this week, it's got very, very good price action. 30% of that ETF is China. So keep that in mind. Now looking at this chart, yen weekly chart, very bullish. At current, we're above, this is, again, the value of the automated trend lines. We're above two support levels, one in blue, the other in red. You want to see a close there. Then next week, you want to see a retest of that support level. And that'll validate that what was resistance is now support, assuming that we don't fail to hold it. Now, your question was, where is there resistance? Well, there's quite a bit of it. The biggest area of resistance is right here at $18.50 per share. You do have rising resistance levels as noted by the automated trend lines. I'll take them off, put them back on. In green. I'm not too worried about that. That's probably going to act as your rising upper band of resistance. The key is closing above $18.50 per share. Daily chart. Before we worry about $18.50 per share, we need to be able to hold $17.75. One trading day left to go. So now you know where your resistance level is. Back to the weekly chart to again talk about it. $18.50 per share. PLT, would I short it? No, definitely not. A few days ago, looking at the monthly chart, you could make the argument for a short because we were consolidating. Now we're down below critical support. My guess is that we rally back. Why do I think that? Weekly chart. We had a good week so far. We've stopped going down. And it appears as though we're probably going to continue to rally here. We'll go to the daily chart in a second. Now, when would I short? If we fade. If we fade tomorrow and close down below the lows of last week or the lows of this week, then I would attack. Not right now. That would be hoping for a breakdown, and we don't want to do that. I think we're going to continue to rally here. Daily chart. No, not a short. You're welcome, Franklin. Have a great night, my friend. Jody, good luck with the trade. Ramon, have you ever heard of or used Elliott wave theory? Yes, I have. Have I used it? No, but it's my way of trading is that I use historical data as well. Much like the Elliott wave, certainly not comparable, but it certainly rhymes with the Elliott wave theory. So it's a very good theory. I don't subscribe to it 100%, but I do believe in using historical data to identify where a stock may be going in the future. No doubt about it. You could use seasonality. You could use price action. So yeah, I have heard of it, and it's very, very good. If you want to spend some time reading a book, I would strongly encourage you to do so. Tesla. Tesla's becoming interesting to me. I want to buy where Kathy Woods was unable to. Low. I don't know if we're low yet. We need to rally back here a little bit more. At a bare minimum, we need to close back above $5.96, $5.97 per share by the end of the month, weekly chart. The week is looking pretty good. Bullish key reversal bar. My alert. Oh, it did fire off. Bullish reversal bar. We could be heading up higher here. Daily chart. Is it a dead cat bounce? Not sure. Once we start closing above these resistance levels, then it's game on for Tesla. Not quite yet. I'm not ready to go jumping into Tesla. It could be as soon as next week. If I do trade it, more than likely, I will put on an options trade, a strangle, and trade it that way. I will be selling the options. I will not be buying them. I want to be the casino and not the gambler. So that's my take on Tesla. Folks, I have an emergency, or I'd stick around longer, but I really need to go. Everybody have a great remainder, a great weekend. Hopefully I'll catch you on Sunday Night Futures Live and have a profitable trading day tomorrow. Be well.